Hey, it's Darius, and congratulations to I-75ers who let me know that they passed the CPA exam this month. See the green check marks? That means they're done. No more CPA review for them. But what about you? Are you connecting well with the material that you're using? Get yourself on the right road. Go to i75cpareview.com and get yourself on I-75 with me, Darius Clark, because the right teacher makes all the difference. I'll leave a spot for you on next month's list.
All right, now we have to know something about the Single Audit Act. So the Single Audit Act requires certain entities that spend total federal grant money greater than or equal to $1 million in a fiscal year to have an audit performed in accordance with the Single Audit Act. Now this $1 million threshold is up from $750,000. That was the old threshold. So it's $1 million and up for audits of fiscal years beginning on or after October 1st, 2024. So basically this means if you spend $1 million or more of federal government money that you've been granted, then your entity has to have an audit performed in compliance with the Single Audit Act. And the Single Audit Act applies to states, local governments, Indian tribes, institutions of higher education, and even not-for-profits who spend federally granted funds. The alternative to the single audit would be to audit each of an entity's various federal grants. Each federal grant would then require an audit that would be inefficient. So under the Single Audit Act, a single coordinated audit of the total federal funds with emphasis on the major assistance programs. So auditors must recognize which programs are considered major. Note that recipients of federal assistance who spend under $1 million in federal assistance, they're exempt from the Single Audit Act requirements for that fiscal year. Right? Which non-federal entities are typically subject to single audit requirements if they meet the expenditure threshold? A, state and local governments, nonprofit organizations, and universities. B, for-profit companies receiving federal contracts. C, individuals receiving federal financial aid. D, all of these. And the answer is A, state and local governments, nonprofits, and universities, because the Single Audit Act specifically mandates that state governments, local governments, nonprofit organizations, Indian tribes, and institutions of higher education are subject to what's called a single audit if they meet the federal award expenditure threshold. B is wrong. For-profit companies are generally subject to different contract audit requirements and are not subject to what's called a single audit. And then C is wrong. The single audit requirements apply to organizations that administer federal awards, but they don't apply to individuals who receive federal financial assistance. And the question asks which non-federal entities are typically subject to single audit requirements if they meet the expenditure threshold, and the answer is state and local governments, nonprofit organizations, and universities. All right, a non-federal entity that expends federal awards is required to have a single audit if its total federal expenditures meet or exceed which of the following thresholds? A, $1 million for fiscal years beginning before October 1st, 2024, and $750,000 is the threshold for fiscal years beginning on or after October 1st, 2024. Is that correct? No. B, $750,000 for fiscal years beginning before October 1st, 2024, and $1 million for fiscal years beginning on or after October 1st, 2024. Is that correct? Yes. C, $1 million for all fiscal years. D, $750,000 for all fiscal years. And the answer is B, a recent update to the Single Audit Act raised the threshold from $750,000 to $1 million for fiscal years beginning on or after October 1st, 2024. And the question asks, a non-federal entity that spends federal awards is required to have a single audit if its total federal expenditures meet or exceed which of the following? And the answer is B. All right, what are some of management responsibilities under a single audit? Preparing the financial statements. Like any other audit, management's fundamentally responsible for preparing the financial statements, including the footnotes, in conformity with the framework, most likely U.S. GAAP, but could be some other comprehensive basis of accounting. Management's also responsible for internal controls. No surprise about that. But here, in a single audit, now management has to prepare what's called a schedule of expenditures of federal awards. That's a detailed schedule of all federal awards spent during the fiscal year, also known as the CEFA, schedule of expenditures of federal awards. Who prepares it? Management. And it's considered supplementary information to the entity's financial statements. Although it's not required under U.S. GAAP, the CEFA is required under the Office of Management and Budget, known as OMB. So management responsible for the financial statements, the internal controls, and this schedule of expenditures of federal awards. Other management responsibilities will include preparing a corrective action plan, basically the follow-up to take corrective action on any audit findings. And this includes preparing this action plan that outlines actions to be taken, the contact person responsible, and the anticipated completion date. So these are management responsibilities under the Single Audit. All right, management's responsibilities under the Single Audit Act include preparation of which of the following? A, financial statements. B, schedule of expenditures of federal awards. C, corrective action plan to respond to any current year audit findings. D, all of these. And the answer is D, all of these, because management's responsibilities under the Single Audit Act include preparation of the financial statements, preparing that schedule of expenditures of federal awards, and preparing a corrective action plan to respond to any current year audit findings. All right, what about auditor responsibilities? Well, in a single audit, the auditor expresses opinions on the following. One, there's an opinion on whether the financial statements are presented fairly in all material respects in accordance with the applicable accounting framework. So you would expect that because it's an audit. But there are other opinions as well. There's going to be an opinion on whether the schedule of expenditures of federal awards is presented fairly in relation to the financial statements as a whole. So that's a second opinion. First, there's an opinion on the financial statements. Then, that opinion on whether the CEFA is presented fairly in relation to the financial statements as a whole. So not an opinion on the CEFA, but an opinion on whether the CEFA is presented fairly in relation to the financial statements as a whole. Is that it? Just those two opinions? No, one more. An opinion on whether the entity complied with the compliance requirements that could have a direct and material effect on each major federal program. So 3 opinions will be expressed. All right, now the auditor will report, but no opinion will be expressed on the effectiveness of the entity's internal control over financial reporting and compliance. So we'll report on it, but we won't provide an opinion on it. So in a single audit, the auditor's work on internal controls is directly tied to their opinion on compliance for major programs. That's one of our opinions that we do provide. But the auditor will perform procedures to obtain an understanding of internal controls and test them. The scope of this testing determines the level of assurance the auditor can obtain regarding compliance. But instead of an opinion on internal controls, the auditor reports on their consideration of the controls, describes the scope of the testing performed on the controls, and identifies and reports any significant deficiencies or material weakness in internal control that were identified during the audit, and we call these audit findings, and we prepare a schedule of findings and questioned costs. So while we're going to provide 3 opinions, one of the opinions we're not going to provide is on the effectiveness of internal control over financial reporting and compliance. All right, in a single audit under GAGAS, what is the auditor explicitly not expressing an opinion on? A, the fair presentation of the financial statements. B, the entity's compliance with major program requirements. C, the effectiveness of the entity's internal control over financial reporting and compliance. D, the fair presentation of the CEFA in relation to the financial statements as a whole. And if you think you know, leave me the answer in the community section. And if you found this I-75 audit video helpful and you want to see the end of it and more videos like it, go to i75cpareview.com and get yourself on the right road to passing audit. Get on I-75 with me, Darius Clark, because the right teacher makes all the difference. I'll leave a link in the description. Once you get on I-75 audit, you can go ahead and download the mobile app called BrainCert LMS from your app store and then enter our course domain. So go to i75cpareview.com and get yourself on the right road to passing the CPA exam.